Last week, I warned you guys that if the Japanese cash and carry trade actually plays out, we could be heading for a global market meltdown. This morning, when we woke up, the Japanese stock market was down 15.17%. The Nikkei 225 was down 15.17%. Right now, you have the Nasdaq futures down negative 5%. You had Taiwan down in its biggest collapse since in the last 57 years. And we could be in the midst of a market meltdown as soon as the stock market opens. To quote 𝗕𝗬𝗕𝗏, he says, Japanese crash, the biggest single day drop ever as fears of an economic slowdown intensify. The Nikkei down 12%. He said, that was a crash. It smelled like 1987. Today was relentless, said the head of strategy advisory. I warned you guys about this last week, and I told you that this was a very, very, very real risk. And today I'm going to show you exactly how it plays out and what you should be doing. Today is probably one of those shows that you don't want to miss. It's probably the most important show that you'll ever watch. Let's get into it, guys. Tell you one thing, it wasn't easy last week. It was the unpopular thing to do, to write this tweet and to do all the shows that I did last week. I mean, I did a show last week saying this could ruin the entire bull market. I also did a show on Saturday because I realized that it actually might be playing out, and that show got over 106,000 views. I also wrote this tweet, and in this tweet I said you got to be watching one chart, and that's the chart of the Japanese yen versus the USD, and I explained the cash and carry trade, and this morning it started to unwind, and it started to unwind very quickly. And there are fears that we could be going into a global, not a local market meltdown, but a global market meltdown, and that's what we're going to be talking about today. I'm going to show you how it plays out. I'm going to show you what happens next, and I'm going to show you exactly what I'm doing and probably what you should be doing. So if you aren't already subscribed to the channel, this is probably the best time to be subscribed to the channel. If you are subscribed to the channel, smash the like button, obliterate the like button. I've been working my ass off to bring you this crypto love and this crypto wisdom at the time when you guys need it the most. I was here last week, I was here on Saturday instead of being with my family because I wanted to bring you guys this because I could see that this is what was going to be playing out. And then last night I was watching it play out, and we were covering it on Twitter, on the front runners, and we were doing this all live. Let's quickly get into it. I don't want to waste too much time here on the formalities, but I'm counting on you guys to actually smash the like button. And let's get the show on the road. So it started last week when I realized that the Japanese yen cash and carry trade was actually starting to close down. And we'll talk about the Japanese yen cash and carry trade in a few moments. I wrote a tweet. I made a few warning videos saying to people, look, this could actually be happening. And then I woke up this morning and I looked at the most important chart on the market, which is the Japanese yen versus the US dollar. And this is what it actually looked like. And then I looked at the actual markets. And when I looked at the markets were down 15%. And that is after various circuit breakers tried to stop stock market participants from actually trading. And this went down as the biggest two-day drop for Nikkei history, even surpassing Black Monday, which was the 1987 crash. There were multiple circuit breakers. The market was down 8%. The markets kept closing. The contagion spread. It went from beyond Japan, and it went to places like Korea, where the Kospi is down 14.64% in the last 2 trading days. It went to Taiwan, which had its worst day in 57 years. It is now spreading to the Nasdaq. As you can see, the Nasdaq futures down 5.32%. So it's spreading around the world. You could see that the Korean stock exchange banned trading or stopped trading. The Japanese circuit breakers kicked in and stopped trading. And this is one of those Black Fridays, Black Mondays type collapses. This is a COVID style collapse, a 1987 style collapse. This is a real global collapse. Let's talk about what's causing the collapse and what we should be doing about it. And I know we did speak about it last week, but I think we should speak about it again. In essence, it started last night. And I was watching this last night and I was tweeting about it. And what we started to see was one of the biggest players in crypto starting to unwind their position. Jump trading, which we'll talk about later, started to unwind positions at a crazy rate. We saw this happening yesterday. They were transferring millions and millions of dollars into exchanges, and they were liquidating them as quickly as they possibly could. And a lot of people thought that jump trading is or still may be going insolvent. So we were watching that, and that started to push down crypto prices. Then a few hours later, the Nikkei index opened. And when the Nikkei index opened, all hell broke loose. Effectively, when the Nikkei index opened, it opened here, and we went down about 13% today. We went down about 13% before we had some kind of recovery. And the recovery is super important. We're going to be talking about the recovery in a couple of seconds. That, of course, spread to all risk assets and all global markets. And you could see that in crypto, $1.1 billion of long positions were actually wrecked. So the entire market got completely wrecked. In fact, more crypto was liquidated in the last 24 hours than on any single day in the past 3 years. This was a serious market meltdown. And so let's look at what actually caused the meltdown, because I think that's the question on everybody's mind. And even if you didn't miss the show last week, maybe this is a good time for us to just remind people why we're going through what we're going through, and where it's going to come out. So first of all, I did make multiple videos about it. If you didn't watch the videos, it's probably a good time to go back and watch a few of the videos. Watch the video here with 𝗕𝗬𝗕𝗧. Watch the video that we made here, this one called They Killed Altcoins. Those are the ones that you should be looking at. I also wrote this tweet, and I think we should go through this tweet, because this tweet explains what's actually going on and what this Japanese cash and carry trade actually is. So for those of you who don't know what the Japanese cash and carry trade actually is, just imagine this. In Japan, for the last 30 years, they have had 0 interest rates. So if you look at the Japanese interest rates and you go back as far back as you remember, you can go back to like 1995, and you can see since 1995, there were 0 interest rates in Japan, except for like a few little short periods in time. There were 0 interest rates in Japan. What does that mean? Well, it means that if you can borrow money for 0%, and you can invest that money and you can generate a return, well then, why wouldn't you borrow as much as possible to go get the return? So let me give you an example. If you have no money, you can go and borrow $1 million or $10,000, let's just say $1,000 in Japan. You can take that $1,000 and you can invest it in a UST bill, and you can earn 5%. You'd be making $50 a year, and then you would be making $50 a year, and you wouldn't have to pay any interest on holding your yen carry, right? And the same thing you could do, you could borrow $1,000, you could invest it in a stock like NVIDIA, and at the end of the period, you could just return the $1,000 because there's no interest on the $1,000. Now, when people can borrow money at no cost, what do? Well, they borrow as much money as they possibly can, and they invest it around the world. They invested in risk assets around the world. And they invested in risk assets in Korea, in Taiwan, in the USA, in the Magnificent Seven, in UST bills. They invest it wherever they can. Because, hey, if you can borrow $1,000 and you can invest it for no interest, why not? Well, that's all good and well until last week, for the first time in a long time. It's not the first time in 30 years. The Japanese the Bank of Japan said, hold on a second, our currency is devaluing and we are starting to get unprecedented inflation. And so what we should do is we should increase interest rates. And so what you can see is, if you go to the chart of, let me quickly get us a chart so we can look at it. Let's go to the USD JPY. So what you can see is that last week, the Bank of Japan increased the interest rate by 25 basis points. And as soon as they did, the currency strengthened, as people said, hold on a second, if this money is going to start costing me money to borrow, I want to start bringing my trade back to Japan and paying off my debt, because I don't want to be paying any of the interest. And so that's what happened. People started to unwind their risk asset trades and to bring the money back into Japan, buying yen, making the yen stronger in the process, and unwinding the risk asset trade. And that is what's causing markets around the world to crash. So you may be asking, okay, well, then who's affected by all of this? Well, really, everybody's affected. Or think about this. Where did the Japanese invest their money? Where did anybody who borrowed in Japan, where did they invest their money? Well, for sure, they invested their money in Korea, because you can see that the Korean stock market collapsed as people start taking their money out of Korea and bringing it back in Japan to pay the loans. You can see that people started to invest that the investors started to invest their money in Taiwan, because Taiwan also had one of its weakest days in 57 years. You can also see that a lot of investors actually took the money and invested it in the United States. And particularly, I think a lot of the money was invested into safe trades in the United States, trades like Nvidia, Amazon, Apple, Microsoft, Google, and what they call the Magnificent Seven, because that is the lowest risk way to make money in equities. And they made a ton of money in equities. I mean, if you take the NASDAQ just for the year and you assume that you borrowed at no cost in yen and you invested it from January 2024, so let's just quickly take a random date here. So let's say that you invested it here, which was the 5th of Jan, and you made money. You made 27% on your trade. The only problem is that now the trade's starting to wind down and you only made about 6%. Now you're still in the money, but the trade is starting to slightly unwind. And so what you can see is that not only are the Asian markets affected, but the US markets also affected. We've got Google down 11% in pre-market trading, Amazon down 10% in pre-market trading, Microsoft down 9% in pre-market trading, Nvidia down 11%, Apple, Meta, Tesla, all down 10, 11%. And if you look at the volatility index, the VIX is an index which measures volatility or fear in the US market. What you can see is that the VIX has absolutely spiked. And in fact, it has spiked back to COVID levels. And we'll talk about those COVID levels in a second. So the Magnificent Seven erased almost 500 billion of market cap in overnight trading. And this was before the markets have opened. We are waiting right now for the markets. Actually, in fact, the markets have just opened. That is what the markets actually look like right now. It's an absolute bloodbath. Microsoft down 5.21%, Google down 6.35%, Apple down 9%, Nvidia down 14% today. Can you imagine being in Nvidia and the trade unwinding? We're going to talk about this because this is super important. I'm glad that the markets are doing this because this was exactly what I predicted before the show. If you want to talk about the numbers, well, if you look at the Magnificent Seven alone today, Nvidia's down 325 billion, actually not even more. Apple's down 300 billion, Google's down 200 billion. Can you imagine the size of this unwind? And of course, this unwind is going to spread to crypto because crypto is just another risk asset. And I think that this has been the most brutal week that I've ever, or one of the most brutal weeks that I've ever experienced in crypto. We had the biggest liquidations that we've had over a 3-day period ever. We had Bitcoin touch 49,500. We had ETH getting killed by Jump and by the unwind down to 2,200. In fact, if you look at ETH and you look at ETH over the last 7 trading days, ETH is down 40% in the last 7 days. One interesting token that you should look at, and we'll talk about this in a few minutes, is Solana. Because if you look at the last 9 trading days on Solana, it's down from nearly $200, down almost 50% to $117. So it did spread to crypto. And I mean, if you look at it, ETH is the same price that it was at the beginning of the year. Also, leverage has been completely reduced. And the whole crypto market dropped under $2 trillion. I'm also expecting an outflow from the ETFs today. And the reason why I'm expecting an outflow from the ETFs today is because I think today is one of those big, massive COVID-style, correction-style risk-off days. And in risk-off days like this, every single trade in the world is going, every single risk trade in the world today is going to unwind. And I think the ETFs are not going to be protected. Today, I think we're going to see every single risk asset in the world selling. So don't be alarmed when the ETFs actually start selling off. Now, I mentioned to you guys that this feels a lot like COVID. And I mean, it feels also like the 1987 crash. It feels like many of the other crashes. But specifically, it feels a lot like COVID. It feels like the system is broken and things are crashing. It's crashing globally. This is a global phenomenon. This is not limited to any specific country or any specific reason. And it feels a lot like COVID. And the thing is that if you put the charts next to each other, what you see is that it also looks a lot like COVID in the charts. And this is, I think, the thing Mike Alfred says. He says, feels almost exactly like March 2020 liquidation in Bitcoin that took us down from 8,000 to 4,000 in just a few hours. Funds were wiped out, and this feels very similar. Watch out for what's going on. So, of course, I pulled out the charts for COVID, and it does feel, let me go back to that. It does feel very, very, very much like the COVID charts. Let me quickly get us a QQQ chart, a NASDAQ chart. which, by the way, if I'm guessing, should be down 5%. Let's have a look at where it is. It is down 4.14%. This is exactly what I predicted. So I'm going to show you exactly what's going to happen next. This is playing out exactly like I predicted. And I'll show you. In fact, let me tell you now, I predict that today the market's closed 2.5% or above. In other words, not weaker than 2.5%. Let's see if I'm right. So this is the COVID correction. And you can see that what happened here was we had a global black swan event. The markets went down from top to bottom for about 30 days, 20 days, before they introduced printing of money, quantitative easing, helicopter money, stimulus checks, and whatever else. And then the markets went into an unprecedented bull market, and you can see what happened over here. What happened over here exactly? This feels and looks exactly the same as that. Something is broken globally, and the only option that the Fed has to fix this is to start quantitative easing and to print more money. If we go to Bitcoin on the same period, we can see that it's exactly the same. You went down at the time. We went down from a high of it was about 10 grand, but we went all the way down to 3 grand. And then all of a sudden we recovered very, very quickly, and we started to go into an unprecedented bull market. The VIX is also telling you exactly the same story. The VIX went up so high. The VIX is the volatility index, went up so high that it actually went to COVID crash levels. So on all charts, this looks and feels exactly like COVID's. Someone says some eerie similarities to 2020. Stocks overvalued, growing risk of a recession, rising unemployment, sharp correlated global market moves down. At some point, the Fed will step in, likely with early rate cuts and probably liquidity too. But when? Until then, expects all markets to correlate. And that's exactly what I think is going to happen. I think all risk markets are going to go down. I think nothing in the risk market category is safe at the moment, but you got to hold on tight. And I'm going to explain to you why you got to hold on tight. In terms of the cycle, well, I Googled when the halving was last year. The halving last year was around May 11th. This happened about 2 months before the halving last year. And this time, it's the same thing that happens every 4-year cycle, but this time it just happened after the halving instead of before the halving. So it's not perfect. History never repeats itself exactly, but it does rhyme, and it's rhyming very, very, very much. And just to give you guys some perspective, I pulled out the prices of Bitcoin a year ago, 3rd of August 2023, 29,258. I pulled out the price of ETH, 1844. And I pulled out the price of Solana, $22.88. Today we got Solana over $100. So just to give you guys perspective in terms of how scared you should actually be. Someone says, this is our 2024 unpredictable black swan event like 2020. Japan is collapsing. Escalation in the Middle East is happening with the potential Iran attack on Israel. But everything will be fine in the next few months. And that's because everything has to be fine in the next few months. World leaders, the US, the Fed, the Treasury aren't going to let the world collapse because of the Japanese cash and carry trade. So the question is, well, what are they going to do? If they ain't going to let the world collapse because of the cash and carry trade, what are they going to do? Come on, class. You know the answer here. What are they going to do? Money. What are they going to do? They're going to print money. Now, Van Spencer says exactly the same thing. He says, the only thing that they can do is they're going to print trillions and trillions and trillions of dollars, because as the Japanese cash and carry trade unwinds, they've got to put as much money back into the economy. Now, how big is the Japanese cash and carry trade? We have tried to do a whole lot of calculations. We believe that based on our calculations, and I can't tell you that those calculations are very, very accurate. What I can tell you is that trade is about $3 or $4 trillion. And so effectively, if the Fed wants to counter the entire Japanese cash and carry trade, which they won't do the whole thing, because I don't think the whole thing is going to unwind, but I think the entire trade of the Japanese cash and carry trade is $3 or $4 trillion. Now, bear in mind that over the period of COVID, the Japanese, the American system, the Fed, the Treasury, printed around $8 trillion. So this is about, to get the same position, they would need, if the whole Japanese balance sheet unwound, they would have to print over the next couple of years about as much money as they printed during about half or 1/3 of the amount of money that they printed during the entire COVID collapse, which is, it's not a big thing. I mean, it's huge, but it's not like unsalvageable. It's not the end of the world as some people were talking. I was reading in Twitter today, and Michael Gade, who actually has been calling this, said, we are nearing a short-term moment in time where the end of the world is actually the bull case. It's not that. It is just a break in the economy. And we know that what the Fed does is that whenever there is a break in the economy, the Fed comes in and starts saving the economy. But now the question is, I said, this is the moment we've been waiting for. It's been triggered by the reversal of the Japanese cash and carry trade. The Fed will need to react really fast to avoid a meltdown that will make 2008 look like a joke. It's an election year. And what are they going to do in an election year? Well, they're going to make sure that nothing breaks. And so what I imagine is going to happen is there's going to be emergency action, and the Fed's actually going to take action. Speaking of emergency action, I did see many rumors that the Fed is having an emergency meeting to discuss rate cuts this week. Garbage. There's no emergency meeting. Don't listen to anyone who talks about the emergency meeting. I said the Fed has not called for any emergency meeting. Please do not believe the garbage. We are in day one of the unwind, and the Fed will wait to see how it plays out. All the rest is bullshit engagement farming. So I know a lot of people want to get likes and follows because they believe that the Fed's going to cause an emergency meeting. No ways. The Fed is going to wait for this thing to play out. And only when they are convinced that this is a global contagion and things are going to break, then they are going to act. And remember, the next time that the Fed is due to meet is actually in September. And what I said here in my predictions, I think I made a bunch of predictions, which, let me see if I can find the predictions for you guys. Here we go. I said, there's not going to be an emergency. I said, the worst is over, specifically for the Nikkei. By that, I mean that markets could still go down, but today was the biggest candle down, and there's not going to be another big day down like this. The US market won't melt down. The close will be better than 2.5%, negative 2.5% for the NASDAQ today. There will not be a Fed emergency meeting today, even after, because the markets are still up 20% this year, and there's no need for the Fed to intervene when the NASDAQ is still up 20% this year. I've changed my tune in terms of rate cuts. Instead of saying that there's only going to be one rate cut this year, I believe that there's going to be more than one rate cut this year, and I think that but I don't think we're going to get a 50 basis point rate hike. I think we're going to get a 25 basis point rate hike. Now, let's look at what the markets are predicting. Now, I'm going to reload this because it changes so quickly now. Every minute here is a change. So right now, as it stands, let's go to probabilities. So right now, as it stands, there is an 88.5% chance that the Fed cuts by 50 basis points. That's the equivalent of 2 cuts in September. And then there is another 81% chance that the Fed cuts again by 50 basis points in November. So, and then again in December. So this is the equivalent of 5 interest rate cuts. I think this is incredibly ambitious, but I do think that now the Fed has to cut. Will they cut in an emergency meeting? I don't think so. That's not how the Fed operates. Unless something actually breaks globally, and nothing's broken globally yet. We've just had the Nikkei down. We've had the NASDAQ down. I mean, honestly, the NASDAQ's only down 4% or 5% or whatever it is. Let's have a look at it. It is down 4.5%. I mean, that's not a big correction in the big scheme of things. Also, again, you have to keep perspective here to say, well, if you look at where we are just this year, the NASDAQ is actually still up 7% this year. It's not even down. And if you look at it in a slightly bigger time frame, I need to give this perspective because it will show you how the Fed is thinking. If you go back to June last year, so the last 18 months. Okay, let's try. Okay, let's go back a little bit more. If we go back to June last year, or here we go, October last year, you still have the NASDAQ up 64%. You still have the NASDAQ up 64%. So I can't see the Fed having an emergency meeting. I think anyone who's talking about emergency meetings is looking for engagement and looking for, I don't know, clicks. But I do think that the Fed is going to meet and have to start printing, which is exactly what 𝗕𝗬𝗕𝗓𝗕𝗓 actually said. To to further exacerbate the point that I have been making, the first Fed speaker since this collapse has spoken. His name is Goolsbee. He says if the economy, he says that he's very chilled. He says if the economy deteriorates, the Fed will fix it. It's not about markets. The Fed don't look at markets. Asked about an emergency cut, he says everything is on the table, including raises and cuts. I mean, they're basically saying, look, we're going to wait for more data before the September meeting. So there ain't going to be a Fed emergency intervention, but rest assured, there is going to be intervention at some point. And when there is intervention, what we do know is that it's not going to be, they're not going to let the economy collapse. So I don't agree with what Michael Gates says. I don't think that this is we are nearing a short-term moment in time where the end of the world is the bull case. I think that's, crazy. I do believe that the worst is over for the Nikkei. I do believe that US markets won't melt down, although they will come down. There's no Fed emergency meeting, and we're definitely going to get rate cuts in September. Let's see how many of them I'm right on. Let's see where I am. I'm willing to put money that on the end of the week, at the end of this week, or in fact Monday next week, the markets are trading higher than they're trading at this very point in time. Just to tweet stamp that, the NASDAQ E-mini future trading at 17,751 right now. As I said that, let's see what happens next week on Monday. Andrew, you'll remind me next week on Monday to keep actually looking at this. What I also believe is that this is our black swan. And we're having multiple things happen at the same time. We've got a Middle East potential war. We've got jump trading, potentially liquidating everything. We've got Mt. Gox repayments. We've got Trump going from a 70% chance to a 53% chance of winning the election in 3 weeks. The US numbers wrecked, etc., etc., etc. Guys, I think that this is the moment we've been waiting for. And yes, God did give you 7 chances to sell at 68K. Whilst we thought Bitcoin was trying to break up. And if you never sold, then God is giving you chances to now start buying. And as I said, if you're in crypto, this to me feels like another FTX type event. And if you remember, I picked up an amazing trade in FTX. I picked up Solana at $13. I picked up a whole lot of other trades at that period. And this is another one of those trades. Now, do I think that you should be buying today and putting all your money in today? Absolutely not. But what I do think is that you ain't going to get many opportunities like this ever again. Just like I don't think we'll ever get another opportunity to buy Solana at $13. And so what I think that you need to be doing is I think you need to be dollar cost averaging for the next 2 weeks every single day if you've got dry powder. Because what I know is that within 30 days, this thing is going to sort itself out. How do I know that? Because I'm looking at history and I'm looking at black swan events. And I'm saying that COVID was a black swan event. And within the top to bottom was less than 30 days. So to me, it feels like in less than 30 days, this is going to be solved. And the markets are going to continue to go up, albeit a little bit slower than they're going up at the moment. I also predicted that the markets would open very low as people panic out, and then the markets would actually start recovering. And if you look at what I said to you guys, a few minutes ago, I said to you, it was down 5%. I said to you, it's going to close down minus 2.5%. Now we're at minus 3.5%, and you can see the market's actually strengthening. I've seen this movie before. You have about 2 weeks to be dollar cost averaging. Right now, what I would be doing is I wouldn't be taking excessive risk, but I would be dollar cost averaging every single day for the next 14 days. I wouldn't be buying meme coins, and or maybe buy one meme coin if you want to have some fun. Buy Bitcoin, buy ETH, buy Solana, buy Arweave, buy Rune, buy the protocols that have users, real world applications, and are going to be here and recover just like they have every single other time. I can give you a buy list. In fact, I will give you guys a buy list. I'll give the guys in front runners a buy list. I also want to say something else. I recommend that you look to start buying this market as quickly as possible. I also recommend right now, and I'm going to make you guys this thing. Join a community. I don't mind if you want to join my community, Josh's community. I don't care. Join someone else's community, but join a realistic, credible community. We in Front Runners, we have our Discord, which is Front Runners. You can see that they did an emergency Zoom at 3:45 a.m. Our researcher, the Irishman, he is in Ireland. It was 3 o'clock in the morning. at 3 o'clock in the morning, they jumped onto an emergency Zoom and they got together as a community. We're going to do another Zoom just after the show today. I was out today. We got messages like this. Just wanted to send you a message, say the Frontrunners group is really something. I mean, your effort, never let people feel alone, is something special. Guys, join a community. If you want to join Frontrunners, I'll make you a deal. If you join today, in the next 24 hours, number one, I promise you that we'll let you in. We'll just open the whole waitlist. And I promise you that if you're unhappy in 30 days, you can write me an email and you can take your money back. I will pay you back your money. If you don't want to be there in 30 days, if you don't want to be there in 30 days time, I will give you your money back. Just ping me. I'll make sure that you get your money back immediately. Here is a list to the Frontrunners thing over here. Click it, join. I promise you in 24 hours, we'll let you guys all in. Even though we said the waiting list is closed, I appreciate now is not a time for exclusivity. Now is a time to make sure that everybody's looked out for. If you're unhappy in a week, guys, I will give you back your money. But I need you guys to be safe. And I need you guys to be getting good, credible information. Whether you get it from me or get it from anyone else, I don't really care. Just get it. Another thing which I want to highlight to you, which I think is very, very, very important. And I think it's very, very, very hard to see it now, but you'll look back at this video in a week or two and you'll say, shit, Run was actually right. But remember I said to you in the beginning of the show that there were circuit breakers that were going off. So Robinhood, you couldn't trade certain markets. And Nikkei triggered circuit breakers which wouldn't allow people to get in and out of their positions. Imagine being stuck in a leverage long or a leverage short, and the market stops and you cannot trade. Finished. You cannot trade. That's what's called a circuit breaker. The good thing though is that whilst TradFi was implementing these circuit breakers, crypto was actually working perfectly. Athena, which has not yet been stress tested, did not depeg. TradFi, while TradFi was doing it, DeFi did not. There was no STETH depeg. There were no depegs. Aave worked exactly as it's anticipated to work and made $6 million in revenue in the last 24 hours. If we want crypto to succeed, we have to stress test crypto. We have to make sure that our protocols work in the biggest of stresses. And to see a protocol that is so new, like Athena, operate perfectly, exactly like it is supposed to. This is a new concept. The concept of an Athena type stablecoin has never, ever, ever been tried in the world. And we can see that even under the worst stressful of conditions, Athena has not depegged. That is a big win for crypto. Same thing with Aave, same thing with old DeFi protocols. I also think that Bitcoin will remain a correlated asset with risk assets until it isn't. And then it will never, ever, ever be correlated ever again. I agree with this quote so much because I think this could be the correction or the global thing that is actually happening, which may actually make Bitcoin uncorrelated to risk equities and actually make Bitcoin the safe place to be as people look for a safe place to be. Right now, where are people going? People are so scared that they're actually going into US T-bills. Have a look at this. This is the TLT. TLT is 20 years of US Treasury. Imagine 20 years of US Treasuries. This is actually up 1.6% today because people are running into safety. Gold is probably, I haven't looked at gold. I'm assuming it's a little bit down as there is a massive risk sell-off. So gold is slightly down. I think that this quote is right. I also think that I like this tweet over here where Ben Cowan, who's the biggest Bitcoin dominance bear, he's a Bitcoin max. He says, with indicators flashing recessionary signals, it means the Fed will begin to cut rates soon in order to try and minimize damage and hope for a soft landing. This means Bitcoin dominance will top soon, probably sometime between September and December, which means that all you have to do is survive until the Fed start reducing rates and the Fed starts printing, and then we're going to go to Valhalla. I think another thing worth noting is that Warren Buffett, he sees around corners. He has been actually selling. He sold the top. And he's never had more cash. Just look at the size of Warren Buffett's cash pile. Warren Buffett has $277 billion in cash. Now, you can call Warren Buffett old. You can say he's probably not the best investor in the world. But you got to be able to see around corners to be selling your Apple shares at the all-time high. To be doing that. So that is what I think you should be doing. I think that you should be right now dollar cost averaging for the next 2 weeks. I think you should join a community. I think don't look at the markets now. If you look at the markets now, you've missed the opportunity to sell. If you want to sell, you've missed the opportunity. This is now a time for buying. Don't buy it all today because this could be the beginning of the contagion. I'm going to say we should hope that this is the beginning of the contagion, because if it ends today, the Fed is under no pressure to start printing. If this thing spirals a little bit further and we start putting stress, because remember, a lot of the companies that bought can take the banking system insolvent. Remember, imagine if these are customers of a bank and now they can't repay their debts because they got wiped in the cash and carry trade, right? So, I mean, I hate saying this, but I think that what we want is we want this market to go down again, and we want things to melt down again, and you've got to survive. If you can survive and you can be buying, you buy strength. I started making a buy list earlier today, but then I just thought it's futile to make a buy list now because really it's Bitcoin, Sol, ETH, Rune, Pendle. Just buy the quality, just buy the quality. And you know, if someone says, don't catch a 49, guys, I don't care. I mean, we're talking about Bitcoin at $50,000. Like, we're talking about ETH at $2,000. We're talking about Sol at $100. Okay, so I'm not going to catch the bottom. But over the next 14 days, I guarantee you, let's put a list together. Tomorrow, I'll bring you guys a list. Tomorrow, we'll have a list. We will put the prices here on day one. So let's do this. Day 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. We're going to put the prices in for the next 14 days, and we're going to assume that your dollar cost averaged every single day. I'll drop this in the front runners for the front runners today. Tomorrow we'll do it on the show. Let's see what happens and where you actually pick these things up. Also, I mean, I don't really want to push you guys to trade, but if you are going to be trading, go to BitGet, go to Bybit. If you go to Bybit, you can win a Cybertruck. If you go to BitGet, you can win $10,000 worth of BitGet token. If you don't want to trade your account and you're worried about trading your account, but you think that you can out-trade this market, then I'm telling you there's only really one place to go, and that is to go to BitFunded. Why? I'm going to explain it to you very simply. BitFunded allows you to trade with other people's money. If you can prove that you're a good trader, and you can prove this by what you do is you pay $50 for a $5,000 position, $100 for a $10,000 position, $249 for $25,000. You can go all the way up to $100. If you can prove that you can get 10% in the first challenge and 5%, or 8% in the first challenge and 5% in the second challenge, in the third time, you're playing with real money. And there's a lot of traders right now that are trading with BitFunded's money, effectively with BitFunded's money. Right now, I'm not recommending that you go and create your own accounts and start playing because the risk here is very big. There's going to be big swings. But if you think you can out-trade this and you want to play with someone else's money, just go to bitfunded.com and try it. Tomorrow, we do a list. Tomorrow we'll make a crypto list of the top 10 or 15 that you should be dollar cost averaging into. We'll start the dollar cost average today. So we'll start the dollar cost average today, and we'll do the prices over the next 14 days, and we'll talk again in a couple of days. I do just want to quickly check in on the Nasdaq. It's down 3.5%. Remember, I said it's going to go down 2.5%. Means I have to claw back 1 more percent. 1 more percent I have to claw back on the Nasdaq. Otherwise I was wrong. But I think I was right. I think the Nasdaq closes down 2.5% down. Let's see. And let's remember, I made this prediction. Here we go. Nasdaq is 2.73% down. I said less than 2.5, right? Yeah. I did say that. Yeah. You heard it. Yeah, I heard it. I'm telling you, I know what's going on here. I know what's going on here. Listen, guys. Again, I'm gonna jump off. We're gonna meet again. If the front runners want to do a Zoom, we'll do a Zoom. If you want to join us, join the front runners. We will let you in today. Otherwise, I will see you guys again tomorrow. Stay safe out there. Make sure that you're not taking any risky trades. And if you can be buying the dip, go for it. Buy the dip. See you guys again tomorrow. Until then, stay alive, my friends. Trade well.